We're going to begin this hour with your money. America's central bank, the Federal Reserve, is announcing a decision right now as we speak on whether to raise interest rates this month.
The Fed has hiked rates 10 times in a row, going back to March of last year. Today's decision comes on the heels of a positive report Tuesday that showed inflation rates have been cut in half from last year's peak. Inflation rose 4% between last May and this May. That's the smallest increase in more than 2 years.
So let's start this hour with NBC News business and data reporter Brian Cheung. Brian, I know you got your computer behind you.
Yeah.
You have been tracking this in real time. So what do we know?
Yeah, well, the Federal Reserve has decided to keep interest rates steady in the target range of 5 to 5.25%. Essentially, this is the first time in a year and a half that they've decided not to further raise interest rates. Now, for what it's worth, doesn't mean that they're done here. Fed officials have described this as a pause, as a skip of some sort. And actually, economic projections that came alongside this Fed meeting suggest that they could potentially hike another once or twice this year. We'll have to see whether or not they follow through on that in the remaining meetings. But in the statement, they described the economy as expanding at a modest pace. They said that job gains have been robust, as we saw that jobs report not long ago showing unemployment essentially near over 50-year lows. And they did talk about the banking system as well. We know there were some jitters with the failures of Silicon Valley Bank and also First Republic Bank. The Federal Reserve saying the U.S. banking system is sound and resilient. So again, the Federal Reserve holding interest rates steady. For those that are wondering, what does this mean for my mortgage or my car loan?
That's what I was just going to ask you.
Exactly.
For all the regular folks out there who want to buy a house this summer or whatever, what does this mean?
It's not an interest rate cut. So for that reason, interest rates are still high. So you should not expect to see a precipitous drop in 30-year fixed mortgage borrowing rates. For example, don't expect to see 3% anytime soon.
And of course, we also know Fed Chair Jerome Powell is expected to speak today. Of course, investors are listening to every pause, every word that he's saying. What are you listening for? Yeah,
well, that's going to happen shortly. Again, Wall Street analysts and those that are just watching the economy are just reading the statement for right now. But they said, at least in written statement, we're going to monitor the implications of incoming information for the economic outlook. That's not saying much, but
monitor the implications.
I know. It's econ speak. It's econ speak. But look, Jay Powell does have a tendency to try to the extent he can, translate it for the regular American people. Maybe he's going to describe a little bit more in detail what types of things that they're looking for as the inflation number came in yesterday, 4% on a yearly rate. We know that's lower than the 9% that we saw last year. But you talk to Americans, they're still feeling it at the store, right? So for them, the Fed wants to get there somewhere closer to 2%. It's not mission accomplished. How does the Fed square those two things with not further raising interest rates, but also continuing to face uncomfortable inflation? That's something we'll have to watch for.
All right. Well, thank you for translating it for us.
I promise I'm not making fun of economists. I appreciate
not at all.
You all.
Yes. Brian Cheung, thank you.
Thank you.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.